Biggest problem all the traders face is reading markets incorrectly. They are looking at lagging indicators, and this includes all the oscillators, the MACD, the moving averages, and all those technical indicators which are there available. Another problem is traders usually believe what they see happening on the charts. Now, just because a particular condition sets up a signal is seen on the chart does not mean that is exactly what is happening in the markets. Many a times, smart money use the same techniques or same signals or same setups that signal you a trade to trap you in a bad trade and then move the market against you, and we call it a failed trade or a failed pattern. Then a very common behavior that is seen amongst the new traders is chasing breakouts and breakdowns. A very crucial issue is of not having clearly defined entry points. Most of the times traders are trading based on observed patterns in the past. So they spot a triangle and they expect something to happen. They spot a flag or a head and shoulder and they expect something to happen. And that is precisely what the smart money is using against them, and then getting fixed on the right edge of the markets. Now, most of the times traders will look at the last bar, the last day, the last price change and try to arrive at a decision. That particular last price change needs to be put in a context of what is happening on the whole chart. Whenever you are entering the markets at exact wrong, be aware that you were being trapped by the smart money. If you are exiting your position just before the market's turn, then you should know that you have been trapped by the smart money. So whenever you feel that you try to enter the markets and that is the precise moment when the markets reverse, as if the markets were waiting for you to take on the position, then you should immediately realize that you were trapped by the smart money. Let's look at an example of a failed breakout. Now, what exactly is happening on the charts? You see prices moving higher, then they move sideways, and we get a correction. Then we try to reverse and see what happens on the reversal. We reverse, we again come back down, and on this day, we get a wide ranging bar and we break out above this particular resistance. Now, if this is the resistance which amateur traders are focusing on, and they see the prices moving above that, they immediately pile on to longs. They might have even placed a stop loss long order above this reference, and expecting that this breakout will continue and we will move much higher from these levels. But this is precisely the time when the smart money is waiting for these amateurs to enter a position, and as soon as they enter, they slam it back down. Anybody who was trying to buy here, they had to throw in the towel at some point in time. And as soon as they are out of the markets, look what happens, it starts moving high. Let's look at another example, a stop hunt. Here you already have a nice sign of weakness. How do you find a sign of weakness? The bar has closed way below the day's high. This is the high, this is the close. So we have closed very far away from the day's high, very close to the day's low. The volume has increased here, as you can see, and all that suggests that sellers were actually very strong. And what happens after that? Immediately the next day goes a bit lower but then closes near the high, and we continue the uptrend. On the third day, we actually take out the high of this bar where the sellers were supposed to be very strong. Now, what the amateur traders are feeling, that this was a nice signal where sellers exerted much of a strength, and now we are breaking out above that bar. It means that the buyers are in complete control and we should see higher prices. But if you closely observe this breakout bar, what you'll see is that the range is very narrow. Even the volume is very low. And that is when you get a signal called as no demand. And look what happens. Exactly the day you felt that the market is going to break out, we start moving lower. And that is how smart money trap you. Let's look at another example. This time a failed breakdown. Now here what you see is that we actually moved higher, we topped out, and now we are moving down with some confidence. And you see this important high volume node on the volume profile. I use these as support and resistances. I have marked this green line as support, and I even have marked this consolidation area in this blue rectangle. And see what is happening. We have broken down below that particular references strongly. The volume is increasing. All the signs are there to suggest that the trend is going to continue down. And as soon as you start selling, what happens? Market starts to move sideways. Now, why did this happen? And we'll come to the main topic, and that is VSA or volume spread analysis. So, what exactly is VSA? VSA consists of three important factors. The first is the range or the spread of that is the first factor. Second is the associated volume, and this is the bar which we were discussing about, and this is the volume associated. Now we do not analyze volume it all by itself, but we look at what was happening in last few bars. And the last thing is we'll look at the close. If this is the previous bar and this is the previous bar's close, this is today's bar, this is today's bar's close, and this is the center of the bar today. So we analyze the close with respect to yesterday's close first. So we'll look that this close is below yesterday's close, so this is a down bar. And with respect to today's high, low and mid, so if we are like close to the low for this bar, then this is a weak close. We are below the midpoint of the bar, then the sellers were more in control. And if we close to near the high of the bar, then it is a strong close. That's all, nothing more, nothing less. And how exactly does the smart money or smart traders relate to VSA? Now, they do not use VSA, or they do not use any other tool like which we use like market profile or order flow. But their trading action gives us signals which we read using VSA. So that is what VSA actually is. So now we'll see VSA in action. I am taking the 1st August 2017 short-term top on Nifty and Bank Nifty. We'll be analyzing it on daily charts first, and then we'll drill down on the 15-minute charts. Okay, so what is happening? First and foremost, we are having a strong trend. Then we see a consolidation. Then we break out. And then what we see is a sign of weakness. We see a strong trend, we see a consolidation, and we see prices breaking out again. And then we hit this particular sign of weakness. It does not tell us that market is going to reverse, but it definitely warns us that the sellers are coming in, and this is a sign of weakness, and this is a warning sign. Basically, you should pay attention to and watch the market closely, how it develops after that. And if you take a broad look, you will see that the markets actually went sideways after this particular sign of weakness. Then what happens? Then we try to move higher. This is the example of stop hunt which we saw. Here the smart money moved higher above this sign of weakness. And what was the purpose? The purpose was to see if there is any buying interest left in the market or not. And when you see that when the smart money pushes the prices up with not heavy volume, but they do not have to do much because the trend is already higher. And when we break out above this particular high, they observe if there is any new buying coming in. And when they see that there is no new buying coming in, what they do, they feel now confident that the market should come down. So we see that by strong markdown on these two bars. Then the market again moves higher. Now, why is this happening? This particular up day serves the same purpose that these 3 days serve, and that is nothing but to test the commitment of buyers once more. So we have a sign of weakness. We actually have 3 in a row. That actually does not mean anything, but we have 3 in a row. Then we try to move higher and we create no demand. And if you see, I'll show you. If you click on the bar, you get this signal on the left. So this was an up thrust. This was supply overcoming demand. And then on this particular bar, what you see is a no demand. So we break out on no demand. Buyers are not very keen on moving the prices higher, and you see markdown on next 2 bars. Again, we try to move higher. and see what happens on the next day. If you have a up bar, it should be confirmed with another up bar. But what we have actually is a down bar, and that tells us that the buyers on this particular bar are not very strong. And what is this signal? This is no supply. And why is it no supply? Sometimes it means that the sellers are not coming into the market, but in this case, it means that there is no demand coming in and prices are moving low. And whenever you see prices accepting below the low of a no supply bar, it means that you have fresh supply in the markets. And that is exactly what we got. So a sign of weakness, a couple of them, and then you see no demand trying to break out above it. This is what we call a sequential setup in volume spread analysis. A series of events tell you that what the sellers or buyers are trying to do. What happens is we break out with no demand, then we come down, we again try to move higher, we test, then the next bar is a no supply bar, and look how this bar does not even go above the high of the previous bar. That is a sure sign of weakness. And then on the next day, we see prices moving lower sharply and continuing for 4 days actually. So if we were observing the market using VSA principles, you would have definitely shorted here. And you would never have shorted on this bar. Now let's look at the same chart on a 15-minute time frame. Here it is. Let me expand that a bit. Okay, so what is happening? This is the top we saw. This is the downside follow through on the 2 days, 1 and 2. Then we get a strong up day. See here. And where does this up day stop? That is an important thing. I'll show you. I'll draw something for you. First and foremost, I'll draw this particular range. Couple of days moving sideways, that tells us that the smart money is actually not from the buy side, otherwise we would have extended the range to the upside. So we have smart money selling on these 2 days, distributing their holdings, and then what happens? Then when we come back up, see where we stop. If we combine these 2 days, which is not possible on AMI broker, but you will find that the most traded area or the high volume node comes at this particular level. And see precisely how the market stops at this particular high volume node. Why? Because this is where there was maximum amount of agreement among the traders, and when the prices come back to that, those who were shorting here, they came back and they defended their price here. On the first day we just come and we stop here. On the second day we basically move sideways and never could challenge to trade above this particular reference. All this tells you that there is some weakness developing. The weakness which developed on 1st and 2nd of August is very true, and it is formed by smart money because now we cannot take them out. And then when look at the daily chart, you saw that this was a no supply, and as soon as we break the low of no supply, you get a signal on VSA and you can short the market. Now the same VSA principles can be seen. You see a lot of signals here. All these are same VSA signals on the 15-minute chart, and you can also use them by looking at the context on the larger time frame and then dropping down to lower time frame and using these signals to take fresh trades. Okay, so now we come back to how you can use the VSA or volume spread analysis, and I will tell you how you can do that. First and foremost, you can refer to the VSA cheat sheet that is available for you to download. You will see what the signals mean, what are the favorable and unfavorable futures, what background you require. That will give you some hold on these signals. You can also read the Tom Williams book, which is available as a free download in the information section below the video. So these are the things you can do to just get hold of your VSA journey.